You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, Spike, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. It is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever exciting, at least we tend to think so, we're not biased at all, Options Insider Radio Network, of course, available on just about every platform under the sun for the on-demand folks. If you want to go above and beyond, join us live. You know where to go, theoptionsinsider.com/secret club. Remember, it's just a secret, just you and me, just talking here. Don't tell anybody else. And of course, however you listen, live after the fact, hit us up, questions, comments, insights, pearls of wisdom. We do love to hear from all of you guys and gals out there. And let's see who we're hearing from on the program today. First, let's go out to the Southern volatility mecca known as Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the program. How are things in the Southern volatility mecca, sir?
Well, you know, I was 80 degrees last night. I sat outside and had tacos and watched my kids play on a playground. It was pretty nice.
So it wasn't 27 degrees and putting on the snow tires then, is what you're saying?
Oh, yeah. So certainly better than the market feels today right now. Certainly better than Apple's last 2 days. Let's just put it that way.
Yes. Let's keep on rolling. Let's go out now. Joining us in the MIAX hot seat today, Mr. Matt McFarland, the derivatives products and biz dev specialist over there at MIAX. The guy, pretty much the futures guru over there at MIAX. Matt, welcome back to the program, sir.
Good to be here this afternoon. A little bit colder than what they're experiencing down there in Austin, but looking forward to talking some vol with you today.
And because there's so much vol out there these days, listeners, 3 people, not enough to break it all down for you. So we added a fourth this week. Happy to have Mr. Jem KARSAN, the founder and senior managing partner over there at Kai Volatility Advisors, returning to the program here. Jem, welcome back to Volatility Views. A little bit of vol to talk about today, sir. You picked a good one.
Thanks for having me, guys. I need my own nickname. I'm getting on here enough. I don't know about the spicy meatball, but I'm waiting.
We'll work on it. We'll workshop it behind the scenes here. As we keep on rolling, it is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was and indeed still is. From a vol trading and trending analysis and unusual activity, all sorts of fun perspectives. And as I mentioned there in the intro, a little bit more vol to talk about today. Coming into showtime, we are seeing pretty much red across the board out there today, even though it's a little bit of a flipping of the script from what we saw yesterday. Yesterday, we saw the NASDAQ leading the charge into the dark side, off over 2% at one point there. And the Dow was green to unched most of the day. We're flipping that script a little bit today. Coming into showtime now, we have the Dow leading the charge to the downside, off about 1.3%. S&P off about 0.8%. And the NASDAQ kind of only a rounding error, off of a 10% to the downside. So I guess taking a break from its excessive downside yesterday. Of course, all that red to end the week means we got vol mostly firming up across the board. You know, it seemed like for a while there earlier this week after Powell spoke, all that vol was coming out of the sales. And now here we are, last couple of sessions, that vol starting to creep back in. Coming into showtime, vol a little bit lower than it was earlier in the session. Spikes when we kicked off the show was at about a 20.5. That puts it still up, but only up about 0.75 of a point. It was up well over a point earlier in the session. VIX cash, same deal. It was at about a 21.5 when we kicked off the show. That puts it up right around 2 points. It was up more than that, obviously, earlier in the session as well. VVIX coming into showtime at about a 134. That puts it up a whopping 18 points from where it was this time last week. Remember, this time last week, listeners, a lot of that vol was coming screaming out of the tape there. And, of course, its counterpart, the Viking, a.k.a. V-Spikes, coming into showtime was at about a 165, almost 166. Puts it up a little over 2 points on the week. If you're wondering what the range it's had so far for the year, it's been a short year. Remember, it only listed back in late October, early November. But it hit a low of about 128. That was back in early November, and hit a high of 201 just a couple of weeks ago, back in the OMICRON madness. So 165, kind of in the middle portion of that range right now. So a lot to unpack. Let's go around the horn. Let's go the opposite of the way we started. Let's go back out to Jem. It's been a little while, Jem, since you've joined us on the show. A little bit of vol has popped up on the screen since the last time you joined us. So maybe let's start there. What did you make of the initial OMICRON madness that we saw a few weeks ago? Then, of course, the sell-off rally that we saw after that. Then all the vol seemingly coming out. And now, of course, coming back to today where the vol is apparently starting to come back in, Jim. A lot to unpack there.
Yeah, so the OMICRON news really, as often is the case, kind of the narrative follows price. We, after November expiration, which is, generally bid relative to everything else, had the Thanksgiving holiday vol, which was very suppressed broadly, but particularly in the indexes. So this kind of led to a steady kind of continuation up when that plug, kind of that linchpin was removed on the Friday, a liquid Friday after that Thanksgiving kind of week. We obviously had that big kind of whoosh down that started. That really, got some beginning of the month flows, December 1st, 2nd, that kind of supported the market. And then, ever since then, we've, had kind of a back and forth. It's been and this has been the case now really for some time. There's been a really kind of tug of war, push and pull market. The vol flows, particularly in the indexes, have been very supportive, very well supplied. People have been broadly hedged. That said, underneath the surface, I think we all know what's going on in single stock land. A lot of stocks hit their highs in February. Breadth has been awful. This is, I think the most recent stat was only about 30% of NASDAQ stocks are above their 200-day moving average. So you've had a really, and a lot of long short managers that I talk to, not in the vol space, having a real tough go of it. A lot of the most crowded hedge fund names, are underperforming the most. So you have some structural weakness underneath the hood, and the vol, complex has been broadly very supportive. So, in particular, recently heading into quad witching, obviously this morning, you tend to get these very positive flows in the week and a half leading up. Really, I've referred to these before, in our last meeting, which is, our last conversation, which was, these Vana flows, right, coming from the decay and skew in these big quarterly expirations, have been significant, particularly tied to also the Fed meeting that was on Wednesday. That was very high vol. That's been priced in event vol. As that event vol comes out, as you've seen in many other times, you see a big kind of push higher. We got that big spike on, Fed day. Not a surprise. There were several big players in the S&Ps. One in particular that bought a 46.5, 47.5, 46.50, 47.50 call spread on in the East 23rd expiration. A big Delta player that's really good. Kind of front running some of those Vana flows. Got a big positive move up as we kind of would have expected. But again, then comes right back in kind of that structural weakness that's really tied to kind of that blood that we're seeing in the street on all these kind of long, short kind of hedge fund names. So there's a lot of underlying weakness. There is structural where vol is less supportive, in the NASDAQ on the downside, and where there are less of these Vana flows, structural flows. You're seeing not a surprise kind of dispersion, way worse performance in those names relative to the indexes. And I think that's something that continues here for some time going forward. So lots to unpack there, but that's kind of what's been going on under the hood.
Let me take it back really quickly to that day when it all popped off. Of course, November 26th, it's a thin day, Black Friday, so weird things can happen on days like that. But we saw this kind of first leg of this Omicron sell-off. Most of the major indices are off over 2%. Vol is popping across the board. Now, historically speaking, throughout most of the pandemic, when we got these vol pops outside of maybe March of 2020, they were pretty short-lived, and you had upside calls and things. You had to dump them pretty quick. We always joke here on the show, usually within a few hours, if not minutes. We saw something a little bit different with this sell-off, where the vol remained for the better part of that next week, as we saw that, next legs of the sell-offs and then rallies and sell-offs again. So I'm curious, what was going through your mind? We saw this first sell-off on Friday and then the subsequent sell-offs later on this week. Were you thinking that maybe this Omicron was going to lead to maybe a new structural regime of volatility, or were you thinking this was mostly a short-lived phenomenon?
In our view, it's very much part of this broader context of the push and pull, knowing that, those big quarterly Vana flows lie behind, and given how high that vol got, right? When you have these events when vol really pops, the hurdle for which the market needs to, continue to the downside in order to avoid kind of the vol decay in this kind of fixed strike world, the hurdle gets so much higher. So, we felt very strongly that the amount of vol that got pumped in relative to the potential, move that we were possibly going to get added to the fact that there were these positive flows coming on the back end. The other side of that tug of war, was likely to lead to a bigger move up. And eventually we did get that. In particular, there was a lot of, stress, like you see at the bottom in some of the skew, that, we saw some, December 3,800 puts, trade on the offer right at the bell, on that reversal, next day up. There were a couple of kind of margin kind of taps on the shoulder, which we haven't seen in a while, that really led to some really high skew. It was really a skew event more than it was a vol event there towards the end, and that's usually a very good sign that you're at a reversal. Vol spiking is one thing, but when you really start to see skew and margin protection, going, that's usually a very kind of short-lived end of the kind of stress. So that's what we saw, and sure enough, we got a reversal. But again, like I mentioned, there's a bigger structural tug of war going on behind the scenes.
Yes, many tug of wars to be discussed here on the show. We could probably do a whole show on just all the charm and Vana flows going on out there, but we have to keep rolling. Let's go back out now to the MIAX hot seat, Mr. Matt. A lot popping off. Every time you join us here on the show, you've got some new updates in terms of what's going on over there in the land of the futures, and indeed all the things you guys are working on over there at MIAX. So if you have that, have at it. And also, what's catching your eye out there from an overall vol perspective these days, Mr. Matt?
Yeah, thanks, Mark. This is the time of year when you kind of look back over the course of the year and take a broader view. And as you look back over how the Spikes Index performed throughout 2021, it's a pretty interesting year. Early in the year, we had the highest level it reached at 36.99 in January. Lowest level it reached was 14.83. That was in July. The average for the year, 19.86. Now, of course, we still have some time left in the year, and 2018 taught us that certainly you can get some volatility around the holidays. But when you think about an average Spikes level of around 20 for the year, with the backdrop of a market that's gained over 20%, it seems like pretty high vol, and it lends credence to the notion that COVID has indeed ushered in a new vol regime. Because if you think of the pre-COVID environment, when you have these type of gains, you're not having an average level of around 20. You've got handles at 10 and 11. But I think it's been an interesting year in terms of you kind of had bookend volatility events. That when we reached that high in Spikes back in January at about 37, and then this most recent volatility that we had earlier this month, where Spikes got up to about 36. I think the key difference between those two events was the speed with which the reverted to the mean. So back in January, it took till about mid-March before you saw a Spikes print below 20. This time around, you saw a Spikes print under 20 within a week. That tells me that although COVID is supporting volatility, perhaps the market is the concerns about it are diminishing a bit.
Let's go back out now to the Southern volatility mecca. Hopefully he's finished up with Mr. Taker. His lessons on the Tombstone pile driver for today are finished. Mr. Meatball, sir, what has been lighting up your tape in yet another crazy week out there for volatility?
Yeah, just the movement in vol has been pretty astounding. The bifurcation of the different indexes is really strange, right? We've got today the Russell 2000's up and the Dow is down 1.2%. The NASDAQ probably looks like it might want to go green again, and I wouldn't be surprised if we got the S&P green. And Matt brought up a really, I think, salient and an important point, because I didn't get to be on Vol Views last week. And one of the things I wanted to kind of ask Jem about is and Mark, you tell me whether you remember a time like this, or Matt. I can't remember a period of time where the VIX and the Spikes went from above 30 to below 20 over the course of 4 days. And I can't think of a single period of that happening. What do you think, Jem? What do you think accounts for that?
Yeah. So again, there is more leverage in the system now, right? This has been increasing for a long time, but really in the last year and a half, the amount of leverage in the system, the amount of not just economically, but in these capital markets with new participants is at all-time highs. And what that ultimately does is, if you have less leverage and two entities are kind of the buyers and sellers are pushing against each other, the market may not go anywhere. Same may be true if you have two really even bigger positive and negative flows. They may not go anywhere. But the difference is it's a high potential energy environment. So when those imbalances kind of happen, there's much more potential energy under the scenes, and you get much bigger moves. It's a much more leptokurtic environment than we've ever seen. Much more fat tails to the outcome. So balances, there's again the tug of war analogy, but we really are in this situation where there's two really massive kind of sumo fighters hitting at each other. When one flips, the momentum is way bigger than it would be if it was kind of you and I kind of sumo wrestling in that ring. So there's I think that's a huge part of it. On top of that, we're at historic kind of valuations. There's a lot of negative kind of we're amidst a historic pandemic. There's a lot of and at historic money being pushed in the system and now being withdrawn. So there are big structural things going on behind the scenes, and so and with that comes bigger hedging and the Von and charm flows I talk so much about, more reflexive effects that underpin the market, and hence you can get kind of some real crazy rotations. Again, I think the dispersion that we're seeing, that historic kind of rotation, we see those in periods when vol is very well supplied on the index level, right? But yet there is real kind of stress underneath the hood, like we're seeing with the weak breadth. So, a volatile, not just a volatile situation, but more importantly, a higher vol situation, right? A circumstance where, and we've seen the vol also breaking out, right? The VVIX we've seen now is kind of reaching kind of historic kind of levels. We think that is actually accurate. We think that is that's how the market should be, adapting and positioning as we enter this next year.
I don't know, Jim, I think you had a good suggestion there. I think you and Mark Sumo Wrestling, I think we could sell a pay-per-view around that. What do you think? I'll be the ref. Matt could be the timekeeper. I think we got a little bit of a side hustle going on here. What do you guys think?
I don't think anybody wants to see us in a diaper pushing bellies against each other.
We could go those big fat sumo suits that you see at like the county fair. How about that? We'll do that.
The meatball versus the croissant.
There we go. Food-based. See, there's a lot of ways we could pitch it. Volatility Sumo Wrestling. Literally no one has ever done that. We are breaking new ground here on the show today. I like that. All right, before we dive deeper into silliness, let's keep on rolling here. Let's go out to the land Matt was just talking about here out there, the volatility futures, a.k.a. that vol surface where so many of the answers to all of our vol questions are lurking. If we can just find them through all the noise out there. Coming into showtime, obviously the futures were a little bit up compared to where they were this time last week. Well, not a ton, and obviously since the show has kicked off, they've come in a little bit even since then. Kicking off the show, that DEES future was up a little over a point, about 1.3 points from this time last week, and the Jan future up about exactly a point from this time last week. So that front portion of the curve remains a little bit juicy, a little bit frothy, but perhaps not quite as bid as you might have thought. Let's go back out to Mr. Matt. He is the major domo of all things futures over there at MIAX. Mr. Matt, what are your thoughts on what you're seeing over there from a vol futures perspective, as well as what you guys are up to from an overall volume perspective over there at MIAX these days?
Yeah, thanks, Mark. Spikes futures continue to go well. The volume remains strong, market quality really strong, and I think since I was last on the show, the key development has been more new, different market participants entering into the market, greater diversity, greater more of the end user type of clients using the product. So that's great to see. And as we're heading into 2022, the key development that we'll be watching in the early part of the year will be the emergence of volatility ETFs that have spikes futures embedded within them. So Convexity Shares has two products in front of the SEC awaiting approval, a 1x long product and a 1.5x long product. So these are similar to VXX and UVXY. Expect approval from the SEC in January. Products perhaps launch in February, and that really completes the spikes futures options derivatives ecosystem. So we're very much looking forward to that.
The more ETPs out there, the better for everybody. Let's go on out. Jem, I know you're more of a skew, charm, and Vanna guy than you are on the vol futures surface, but anything catching your eye out there in the world of vol futures since the last time we chatted, sir?
Yeah, like you mentioned, we're much more looking at fixed strike vol than we are floating. To kind of our listeners that kind of don't focus on as much the fixed strike really being on that kind of the option side where where that's sliding to. Fixed strike has been, pretty muted given the moves recently. And part of that is because you had a higher skew. What I find interesting is that was the case, up until very recently. That skew in the S&P has come down dramatically. And so, I could see there being now higher spikes into declines, in vol. So, from here, it becomes harder to do things like put spreads and whatnot with skew flatter in the options, which is likely to have a bigger effect on the VIX futures into decline. So, and you could have a reversion of that skew really increasing some of that, convexity to vol performance on the downside from here if we get declines from here.
Mr. Meatball, same question for you, sir. I think catching your eye out there in the volatility term structure these days.
Yeah, we have been holding the term structure has been holding contango pretty well. We briefly got into backwardation last a week ago, 2 Fridays ago, but it's been pretty much, despite the up and down moves, it's been a pretty stable 21-ish around the VIX between 19 and 21. And the vol futures, which are December's now heading into expiration, I'm really interested in how we expire and what happens for the next couple of days, because a December 22nd expiry, we have 1 day of trading and then we have the holidays start. And I'm really interested to see how that plays out with everything going on in these markets, and whether they're just going to absolutely spike the spikes and the VIX lower early next week, especially if we manage to get green today. It could be a VIX. We could see vol have a complete bloodbath over the next couple of days if the S&P can get into positive territory today. And we're talking, the NASDAQ just went from down 100 to up 30 over the course of 5 minutes.
That's what Vol Views is for. We're here for turn vol, if nothing else here on the show. Let's go on out now to the world of vol options. Let's start in Spikes land, because there was some action since the last time we chatted here, listeners. A little bit of adjusting over there coming into today's show. We're seeing some different strikes lighting things up out there in Spikes. Still going out next week, mostly December. We got number 5. Let's just do a top 5 really quickly. We got the D's 20 puts, number 5. Number 4, the D's 18 puts. So once again, that a little bit of put action, followed by the D's 21 puts. So not quite just the call vertical versus puts the way it used to be. Now we have 3 puts, followed by the D's 24 calls for number 2, and taking the top spot out there in Spikes options right now, the D's 30s. So a little bit of a smorgasbord out there. Mr. Matt, I know you're not watching the futures. You're watching Spikes options, sir. What's catching your eye? And can you break down this trade that went up on Monday for us?
Yeah, it was a decent-sized trade. In total, it was 6,800 contracts. And a portion of the trade was closing a position that was put on back in November, and another portion of the trade was initiating a new position, and the new position is essentially a December 2130 call spread versus buying the December 2130 call spread versus buying the December 18 put, and there was done as a package. For a debit of $1.49. So essentially that position that's left heading into D's expiration is in the money if Spikes settles below 16.5 or above 22.5, which, and as you mentioned already, we're kind of right in the middle of that. So we'll see what happens over the next few days heading into expiration.
We shall see indeed as we keep on rolling out there to the big dog, which is VIX, looking a little bit bigger this week even than last week. The ADV skyrocketing these days. It's over 700,000 now, 711,000 to be precise. That's up another 18,000 from this time last week. I can't recall the last time outside of the mad days of last March, perhaps, where we saw the ADV get to these levels. I mean, just a few weeks ago, about a month ago, listeners, it was threatening 400K in the other direction. So big change as we saw this Omicron vol squeeze in there and maybe squeeze back out. So yeah, 711 is the ADV right now. And today looking like it's going to threaten it again. Already 458,000 contracts on the tape. Will we see the worm turn out there today like the meatball was saying? Will we see vol come crashing back in? If that's the case, you can expect to see even more paper in the latter half of the session. Let's break it down out there right now, see what's lighting it up. Last week, as you'll recall, listeners, for the first time, potentially ever, it's been a while, certainly, since we've seen that as well. In the top 10 positions out there in VIXland, they were all puts. That's the first time we've seen that in quite some time. Usually there's at least a call or two to be found somewhere, and that is the case this week. A few calls have fought their way back into the top 10. Again, it makes sense. We have seen a little bit of resiliency for vol over the last few sessions. So it cost you 129,000 contracts to break into the top 10 in VIXland right now. They get you to the D's 40s, the first of two calls in our top 10. Number 9, $1.42 of the D's 30s, and then that's it. The rest is all puts all the time. Number 8, $1.50 of the D's 19 puts. Number 7, $1.50 as well of the D's 20 puts. Number 6, 157,000 of the December 15 puts. Number 5, our first of two Jan positions, 161,000 of the Jan 18 puts. Number 4, back to D's, 165,000 of the D's 16 puts. Number 3, our final non-December position, we have the Jan 19 puts, 202,000 of those. Number 2, 225,000 of the December 17 puts. And rounding out the top 10 this week, the D's 18 puts, 261,000 of those bad boys. Total of about 9 million contracts open out there in VIXland right now. By 5.4 million or so on the calls and about 3.6 million on the puts. Let's dive into some action really quick out here for the week. Today, like I said, 458,000 contracts on the tape, so a pretty robust day. The most active contract today, get this, listeners, you'll like this one. It's the March 60s. Of course, that was everyone's first assumption, was it not? 57, almost 58,000 of those already on the tape as of a few minutes ago. Listen, number 2, 28,000 of the D's 20s. Number 3, 26,000 of the D's 30s. Number 4, back to March, the March 30s, 26,000 of those. Could we have a March 30-60 ratio vertical going up out there today? I'll have to dig in a little bit to find out. And rounding out the top 5 out there this week, we got 25,000 of the D's 24 calls. Yesterday, a little bit more paper on the tape, 519,000 contracts to be precise. The most active contract yesterday, 45,000 almost exactly of the D's 18 puts, followed by 41,000 of the December 19 puts, 40,000 of the D's 17 puts. Number 4, we have the Jan 25 calls. So there were some calls to be found yesterday, 20,000 of those. And rounding out the top 5 yesterday, we had the D's 20 puts, 15, almost 16,000 of those. Wednesday was the most active day of the week, at least so far, but today's on pace probably to beat it. Wednesday, 627,000 contracts on the tape. 69, almost 70,000 of the D's 18 puts taking the top spot on Wednesday, followed by number 2, 48,000 of the December 20 puts. Number 3, 48,000 as well of the December 19 puts. Number 4, 45,000 of the D's 20 calls. And rounding out the top 5 on Wednesday, 31,000 of the December 17 puts. Tuesday, also pretty active. Really only one day this week that didn't do a lot of paper. Tuesday, 587,000 contracts on the tape. Number 1 on Tuesday, 79,000 of the December 18 puts, followed by number 2, 78,000 of the D's 19 puts, maybe some roll actions and verticals going up there. Number 3, 42,000 of the D's 21 puts. Number 4, about 40,000 of the December 20 puts. And rounding out the top 5 on Tuesday, 29,000 of December 25 calls. Typically, most days, except for looks like Monday, we have one call at least fighting its way into the top 5 every day. Monday was the light day of the week, only 387,000 contracts. We've already surpassed that today. The most active contract on Monday, 36,000 of the December 17 puts. Number 2, about 31,000 of the D16 puts. Number 3, 27,000 of December 20 puts. Number 4, 23,000 of December 18 puts. And Monday, again, being the only day where it was all puts all the time. Number 5, 17,500 of the Jan 25 puts. Mr. Meatball, any of these crazy positions lighting it up out here on your radar this week in VIX options? And also, how many of these March 30 60s did you buy today, sir?
Well, that was not me. You know what was really fascinating is, and you hit this when you're going through stuff, on the 14th, which I believe was Tuesday, which was the day before the Fed, market get absolutely ugly. and we have puts outpacing calls 1.2 to 1. There's not a lot of appetite for upside volatility in VIX itself. I think they're actually heading straight into the indexes rather than using the VIX to hedge off that volatility. That's partially because implied vol's high, partially because VIX already in the 20s. But it was definitely interesting that we saw the ratio of puts to calls the way it is. And yeah, I mean, we're the VIX is over 23, and you've got 70,000 of the 18s and 19 puts trading. We've got a lot of traders setting up for vol to fall, and I don't know if this is possible. We talked about this. Can we get a downside gamma squeeze in VIX if it starts to fall and we start hitting some of these heavy strikes, or is it because of the nature of it being tied to futures that you don't get the same kind of push lower? Kind of interested in whether something like that can happen. I think we've seen it maybe once, but that's really what's kind of blown me away.
Mr. Jim, I know you don't watch the VIX options too closely, but if anything caught your eye this week, have at it. And then B, what about this thought of a downside gamma squeeze in VIX, sir? What are your thoughts?
Yeah, I think you could very well see that. We do pay attention to the VIX options, not actively trade them, but obviously in their connection to the S&P vol complex, we definitely take a look. Our view is kind of broadly, as Mark mentioned, that kind of the vol is priced accurately at this point. There's less upside from here. Broadly, though, vol is high. Important to talk about, the seasonality here, right? I think you have that big JP Morgan trade on the S&P side coming in at the end of the quarter, which everybody's kind of stopped talking about. But vol is about to be very well supplied in 2 weeks in index land. You pair that with an already kind of higher broad volatility level going in to end of the year. I think the other flows that we don't talk so much about in here, which aren't vol specific, but there's $500 trillion of long assets in the world, and it's up from 420 just a year ago. So there's about $80 trillion coming into the in the market this year. A good chunk of that's likely to get allocated Jan 1st, right? So there is structural support in this market from that into the end of the year. That's a lot of what drives this kind of January effect. Those things are vol dampening, given how high vol is during this period. There's a reason in that late 2018 swoon that that last week of the Santa Claus rally still happened when vol's high. That Santa Claus rally tends to be even stronger, and that January effect tends to be even stronger. So I think vol is a big part of that feedback loop. That is seasonality. People don't really understand that outside the vol space, but again, to hit on my hobby horse fun and charm, like there is a lot of potential energy in the system for a move higher. I do think vol is likely to get more compressed here as we get into the end of the year, and there are structural flows that make that likely. So I think again there's some pain out there, but it's likely to resolve higher in the short term, into the next several weeks.
Should be interesting to watch those flows there in the beginning of January. You're right. I had a chance while you're talking to go dig up this March vertical here in VIX land, and didn't go up as a spread, so that is interesting. And looks like it did go up 13,000 of the 30s, and then at 1042 and earlier, the 60s actually went up all as one chunk about 15 minutes earlier, and those went up late, and then another 13 or so thousand of the 30s went up about, looks like almost 2 hours later. So weird execution. Obviously, it wasn't done as a straight up ratio type vertical. It is strange that both of those strikes would be trading so close to each other in terms of time, but weird stuff abounds out there in VIX land. That's why we like to talk about it as we keep on rolling. Speaking of weird stuff, a lot of weird stuff afoot also in the world of the ever melting VIX ETPs, perhaps not as melty this week as in previous weeks. In fact, as of right now, VXX is at about 21.5. That only puts it up about half a point from this time last week. It was up obviously much more earlier in the session. Today, a pretty robust day, about 233,000 contracts on the tape. We're also seeing this volume effect in the ETPs as well. ADV ticking up in VXX quite a bit since our last show as well. It's up to about 317,000. Now it's up to another 11,000 from this time last week. So VXX putting up some numbers these days. Let's look really quickly what the size positions are out there. Quick top 10. Number 10, 18,000 of the, there's still one pre-split adjusted VXX position out there. And of course, if the erosion continues the way it has outside of this past week or so, we may be talking about reverse splits again sometime in the near future. But right now, the VXX1, the Jan 12 puts are still there at number 10, 18,000 of those, followed by number 9, 18,000 of the Jan 20 puts. Number 8, by the way, there's only 2 calls in the top 10 right now in VXX. One of them is number 8, the D60 calls, 19, almost 20,000 of those, followed by number 7, 20,500, the D18 puts. Number 6, about 21,000 of the Jan 21 puts. Number 5, 22,000 of the D's 21 puts. Number 4, 29,000 of the Jan 22 puts. Number 3, 32K of the D's 19 puts. Number 2, our second and final call in the top 10, 38,000 of the D's 30s. And rounding out the top 10 in VXX land right now, 47,500 of the D's 20 puts. Again, the way we're looking today, those are looking pretty good. But if you short a ton of them, which I'm guessing they're not, because it's VXX, people are load up these things to high heaven. So I'm trying to spin it to a positive. We'll see. If this vol erosion continues, we could potentially threaten a 20 handle today. It would be quite a bit, but we've seen crazier things out there. Let's see what's crazy out there today from an action perspective. Not a ton of paper lighting up the tape today. The biggest, most active contract today are the D's 22 puts, about 11,000 of those, followed by 8,500 of the D's 21 halves. All this is going out today, by the way, listeners. Number 3, 8,300, the D's 22 calls. Number 4, about 7,000 of the D's 22 halves. And rounding out the top 5 most active today, about 6,000 of the December 21 puts. Mr. Meatball, it's been an interesting time to watch these ever-eroding ETPs. What's been lighting up your tape and the tapes of your crazies in Pitland these days, sir, in VXX?
Yeah, I mean, for everything, for all the vol that we've had over the last week, all right, and this is really the amazing thing. So for all the vol that we've had since the beginning of, let's say, starting on the 24th of December or of November, for all the vol that we've had on the 24th of December or of November, VXX opened 2140, closed 20 and a 2055. Right now, it's trading 2144. You have not made a stinking dollar being long this thing, and there's a reason, because of VIX term structure. If you want to trade these, trade them intraday, trade them for quick pops. If you try and buy and hold some of this stuff, you are going to get your you-know-what handed to you, and you're just going to spin your wheels. And as bad as VXX is, when we look at UVXY, it's even worse. It closed on the 24th. It opened 1636, closed 1541. It's currently 1548. You went absolutely nowhere. Even if you bought end of day, right before we had this huge vol event, you made nothing being long UVXY unless you traded it. You can trade these. You cannot hold them. Say it one more time.
Yes, if they've listened to the show long enough, they should have that message beat into their skulls by now. If not, just listening to the numbers on these names every week should remind them of that. But c'est la vie, since you mentioned UVXY, let's get to that as well. Then we'll get to some of you crazies, bring you on the show, see what you guys have to say about all this mad vol we have popping off out there. UVXY pretty much giving up the ghost as we've been talking here on the show. It was up more early in the session. As we're talking now, it's almost unched on the week. It's up slightly, up about 0.2 of a point. So 15.5 right now. So again, speaks to what Mark was just saying. And the upside in these names usually pretty short-lived. And when it's going, you gotta get out of Dodge. Hence, still my regret over not closing out the short leg of my UVXY put fly from a few weeks ago. But I digress. Let's go out here now to what's lighting it up out there in the UVXY options. Smaller beast out there, obviously. By the way, a pretty active day today, about 191,000 contracts on the tape. The ADV also looking firmer up to 213,000 contracts. It's up about 13,000 from this time last year. That's a pretty hefty number for UVXY. Let's do a quick top 5 out here. Number 5, we've got the Jan 1s. These are still pre-split adjusted. So, yeah, they're holding on to these. By the time we get to that expiration, we may have to reverse split again. UVXY usually around the 10 handles when they start talking about that, listeners. So we are not that far away. Remember, it reverse split to 40. 4-0. Not too long ago, listeners. So insane times we are living in. Number 4, 8,800 of the Jan 75s. So talking about the complete polar other side of the spectrum, the 1 puts to the 75 calls. Number 3, 11,500 of the D18s. Number 2, 12,500 of the D70s, excuse me. And rounding out the top 5 this week, about 13,000 of the D15 puts. It may surprise you that there is some upside in there, but as we've seen in the past, usually people have been harvesting on those levels and getting surprisingly decent levels to do so. So I cannot fault them for doing that. We first noticed that back in September. It seemed like a popular trade, and it has persisted throughout the rest of the year. In terms of the most active trades lighting it up today it's the D16 puts, which are now in the money. They were out of the money right when we started the show. Now in the money puts, about 13,000 of those. Number 2, about 12,000 of the D16 calls. Number 3, about 12,000 as well of the Ds expiring next week, the 23rd. 17 calls. Number 4, about 10,000 of the Ds expiring this week, 17 calls. So a lot of action on the 17 strike this week. And number 5, here we got 9,300 of the December 18s all going out today. Not a ton lighting it up on the single name earnings front this week. We had some names popping off this week. Rivian for the first time. We had FedEx and Adobe yesterday. We had Lennar on Wednesday. Mr. Meatball, your favorite, Darden Restaurants. You want to talk some breadstick vol? Now's your chance, sir.
Oh, yeah. Darden Restaurants, otherwise known as Expensive Chef Boyardee. Yeah. No, I did not trade around Darden. I got to be honest.
How did you resist? I know you cannot resist slinging that breadstick ball, sir.
Yeah. You know, I'm not going to go on my Olive Garden diatribe. I will just remind everybody that if I put bread in a toaster and butter it, you're going to think it's delicious. All bread is good.
Wise words to live by. All bread is good, except for you folks out there on the Atkins. That is heresy to you. As we keep on rolling right on into the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, let's get to it right now. Really quickly, our question of the week is raging out there right now. It expires in about an hour or two. So if you're listening live, you can still play along. If you're listening after the fact on the podcast, it may be done by the time you get it on the network. We shall see. But so right now, it's that same question we've been asking you for a while. We wanted to tweak it one more time and put it out to the end of the year. Quite simply, where will VIX close at the end of the year? Above or below 20, so slightly elevated or perhaps not so much. And once again, you folks are completely split down the middle. It is fascinating to watch this, which again is what makes a market at the end of the day. Right now, coming into the latter portion of the show here, 53.5% saying below 20, 46.5% saying above 20. That's a little bit wider split than most of the other times we've done this question on the weekly basis. It's usually been 51-49, somewhere in that range. So you guys are very evenly split on this. Again, you got about an hour or two to make your voices heard. I would ask everybody else on the panel, but we're going to get to that in a crystal ball in a second. So instead, let's keep on rolling. By the way, we have Corey chiming in here saying he thinks VIX will only close below 20 if the majority thinks it won't. Okay. So a little bit of a fade of the crowd out there from Corey. Let's go to this one, actually. This is a good one for you, Jem, because you love yourself some skew. Stephen T. He says, I'm one of those new converts to the options market, and I've been listening to most of your shows for a while now. I recently added volatility views into the rotation as well to improve my understanding of all things vol. Well, excellent choice, Stephen. You are clearly a man of discerning taste. And quite handsome, by the way. I can't see you, but I can just intuit that from your letter here. He says, I think it's starting to make sense for me, except when it comes to the value and impact of skew. Should I not pay attention to the skew index? It seems like Mark is not a fan. Also, what are some of the other things I need to keep in mind when skew is really high outside of the obvious of not to buy puts? So let me just clarify that for a second. My thoughts on the skew index. I've said it before. You're right. I'm not a huge fan of it. But the reason why is any product that attempts to do this has challenges, which is taking two moving parts, the call wing and the put wing, and condensing them into one number. It's always going to be obtuse, and it's always going to obscure some of what's going on out there. That's my problem with skew index, outside of the fact that it's only updated once a day. So it has no real intraday utility at all. It's more of just an indicator. But if you use it as that sense, if you see it's ticking up and trending up, and it's a flag for you to say, hey, maybe I should investigate this more, that's fine. That's a perfectly reasonable use case. People get super jazzed whenever skew index is high, but they don't really know. They haven't done the legwork to see if it's something going on with the calls or the puts that is driving that number. And so that's why I'm a little bit dicey on it. But Jem, you spend your days watching skew all day. What do you have to say here for our clearly discerning listener, Stephen T., who wants to know some things you should keep in mind when skew is really high outside of the obvious not to buy puts, sir?
So the skew index is, like you mentioned, not only looking at the call and put wing and combining them, which is not a great tool, but more importantly than that, it's looking at moneyness. And the way most market makers and most dealer sophisticated participants look at skew is via delta sticky skew. So probabilistically, based on vol, what delta, the one standard deviation. And that's kind of how it tends to move in the most mean reverting way. I know that's a complicated concept for kind of your average listener, but the point being is there's some embedded flaws in looking at moneyness when you're looking at skew, which I think is a major problem. If you do look at delta sticky skew and really can get a clear-eyed view of where skew is, it's actually quite mean reverting. So when you see high levels or low levels, it tells you a lot about positioning in the skew, across, for dealers. And that itself is very, very telling. Again, when skew is high, it's, broadly means that far out of the money puts, in the market are short by dealers, which leads to more of this kind of buyback of delta, which I think is very important to understand. It's also easy, oddly, to hedge when skew is high. Why is it easier to hedge? Well, when skew is high, you can buy vol cheap. So put spreads, things along that line are actually easier to hedge. So ironically, there's a reflexive support to markets when skew is high. Again, I know that's counterintuitive to a lot of people, but watching that skew and understanding what the positioning is on the tail is very important to understanding kind of dynamics and flows. If you regress that skew, a delta sticky basis relative to returns, you get some really interesting results. So something very important to look at and to understand.
A difficult concept to squeeze into 5 minutes or so here, but a great question nonetheless. We'll obviously keep discussing skew here on the show because it is a component and a big component of everything else we talk about here on Vol Views. But now it's getting to be that time, listeners. The most difficult, dare I say it, the most dangerous portion of the show. It is time. The crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, you know what that song means. It is time to bust out the crystal ball and attempt to wrestle with the volatility gods for another week. We have a double challenge this week because next week, Christmas Eve, no show next Friday. So we have to go out 2 weeks, which pretty much lines up exactly with our question of the week right now, which is, will Vol close at the end of the year, the 31st, which is 2 Fridays from now, above or below 20? So let's look really quickly before we get there. Let's pay off our prognostications from last week. Last week it was myself and the Rock Lobster. Both of us were feeling, shall we say, a little bit lower on the vol front. Mr. Rock Lobster was sub 16, 15.99. I was a little bit higher at 16.35. Spoiler alert, we are not there. Coming into the end of the show, we have Spikes back in the teens. Spikes is at about a 1985, 1984 or so right now. And VIX Cash just at about a 2075. Or so Spikes in the teens, VIX not so much, but nowhere near a 16 or 15 handle. So no love for us. Let's see what we had really quickly. Run down some of our listeners if we had any bullseyes here. 22, that looks all right, better than some of the others. 21.3 for Super VIX. I just love that handle, Super VIX. So he's one of the closer ones. Still not within our 10th of a point margin of victory. Mensa looking 2065. Actually not bad, Mensa. You're about 0.12 away. We'll see. I'll have to discuss with my producers. I'll highlight you and see. That's pretty close. Let's see. 1920. Let's go to some of our chat folks. 16.5 for Frank. No love there. MU 1865. No love there. 19.5 for Options Queen. That's not terrible given where Spikes is. 1984. You're within the ballpark at least. Closer than I was. I'll give you that. And 17.25 for Luigi No Joy there. A bunch of other prognostications in the teens. I don't see anybody with a really 19 or a 20 handle here. So looks like it was a challenging week for all of us. So that means no winner this week. So we spin it ahead to 2 weeks from now. Let's go around the horn. Let's start with Mr. Matt. Sir, you got a double dose here. First off, if you have a vote in our poll, which is will VIX/Spikes end the year above or below 20? And then as a corollary to that, if you have a prognostication for where we'll be in 2 weeks' time, sir, how about it?
I think it's going to be a quiet holiday season. So I think I think Spikes will settle the year under 20, and I'm going to call 18.5 for Spikes end of the year.
18.5. Oh, so a little bit of you never know. Those last day or two of the year, anything could happen. They're crazy. It could be very thin markets. So that's what throws another monkey wrench into these end of the year type polls. When it comes to vol, things are a little bit crazy at the end of the year. So Mr. Meatball, speaking of crazy, first off, I have bad news for you. I just was informed by our chat that the Darden CEO stepped down. So I'm sure you'll have to pour one out for him. You'll be very sad to hear that news. And then B, more importantly, what are you feeling for this time in 2 weeks from a vol perspective, sir?
Yeah, I'm bummed no show next week. That's a huge bummer. I will say, well, I got to bet against my book, so I'll go 29-29.
29-29. All right, Mr. Meatball, clearing out the upside there. Like I said, I lost this week, so I deserve to go last. So let's go on out to Mr. Jem. Mr. Jem, it's been a while since you played this game, so hopefully you remember. We gave you a more challenging task this week. You have to go out 2 weeks now, so pretty much pick where vol will end the year. What are you feeling for 2 weeks from now, Mr. Jem?
15.99. So
I like it.
We're going to see some real compression here going into the end of the year. Again, that JP Morgan trade comes right at the end of the year. It gets front run by all the ball managers out there. On top of that, those big positive flows I mentioned coming from equity land, are kind of immutable. There's a lot of stress out there. But this potential energy of ball being higher also is likely to, give us a little Santa Claus rally. So, on the low end.
Yeah, listener just recommended a great Twitter thread all about the impact of that roll. I have yet to check it out for myself, but it does seem interesting. So 15.99, I thought I was going to be maybe the low man on the totem pole, but Mr. Jem undercutting me. I was thinking more of along the line of a 17 handle. I'm going to say 17.28 to end the year. So it looks like most of us outside of Mr. Meatball, who says, quote unquote, he's fading his book, are below the 20 handle for the end of the year. So that's where we fall in our poll, listeners. All right. That music means an hour flies by when you're talking vol. Mr. Jem, glad to have you back on the show with us today. But before we go, if folks want to check out what you have up your sleeves and maybe learn more about Kai Volatility Advisors, where should they go? What should they do?
Yeah, thanks. Check out my Twitter feed, jam_croissant. Play on my name, and then our website, kaivolatility.com. Happy to have anybody kind of stop in. We do a webinar here once every month or so here going forward. So anybody wants to learn about our products, just hit us up via the comment section on either DMs or comment section on our website.
I'm still liking that volatility food-based sumo battle, the croissant versus the meatball. I'm thinking we could do something with that. I'm just workshopping that. Think about it. Let me know what you think. My take will be a modest 46%. How about that? Just to get things going out there, just for coming up with the idea. As we go around the horn, since I'm involving him in a sumo match, I might as well let him go next. Mr. Meatball, sir, what do you think your odds are in that sumo match? And B, if folks want to hit you up with their own ball questions, where should they go? What should they do?
I don't know, Jim. I forget how you're what, a good 6'6", 6'7". I'm 5'8". It'll work out great for me. How can I lose?
It's all a frame of mind.
5'11", but it'll be a fair match. The bigger guy doesn't always win. So, all right. You got some trick stuff behind your sleeves. So.
Oh, yeah. Well, I'm known for my trickiness.
You have been training with Taker lately, so that could help you.
That's true. So, hey, guys, I'm writing a VIX blog every day, laying out some what I'm seeing, what's trading, and how I'm interpreting. Go to optionpit.com and read the VIX Edge. You'll be happy.
Oh, Luigi's claiming I snubbed him. I thought that pick was for this week, Luigi. You're 17.25 for 2 weeks from now. Oh, then apparently I did snub you by 0.03. So I apologize. I pulled an Andrew. I didn't even know it. All right. And you know where to go to find out more about all things spikes. MIAXoptions.com/spikes is the place to go to learn more. We got to get on out of here, but don't worry. If you listen in live, you want more in the old ear holes. We'll be back in a little less than an hour now to break down the crazy week of unusual activity. Probably do some live trading too. It always manages to sneak in there on Options Oddities. If you want to learn more about that, you know where to go. theoptionsinsider.com/secret club. And we'll be back, of course, for most of our shows next week. No vol views on Friday, unfortunately. Don't blame me, blame the markets. And we're back again in 2 weeks to round out the year with another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.